Hi, my name is Devang Mehra and I'm the senior partner at the Financial Analyst. So today we'll be covering the bullish engulfing candlestick pattern. It is a very easy to use and easy to spot pattern, and the analysts have been using this for a long period of time. Statistics have shown that if correctly spotted, a bullish engulfing pattern can give highly accurate results. So let us get started. What happens in a bullish engulfing pattern is that there has been an extended downtrend. Stock prices have been falling tremendously, and at the end of a downtrend, there is a small red candlestick, which shows us that the day has been bearish and that the selling is going off steam. So it is a 2 day candlestick pattern. So at the end of a downtrend, we see a small red candlestick, and the next day, the day following the small red candle, will be a highly bullish candle. And this candle will be totally engulfing the previous day's candle. So if we have spotted this pattern, this is what a bullish engulfing pattern is, and this is followed by a rise in the prices. So this is primarily a trough in the downtrend. So, as we've covered, it is a 2 day candlestick pattern occurring at the end of a downtrend. The first body is a red body and it is completely overshadowed the next day by the green candlestick. Prices have been declining constantly, even if it is a short term downtrend or a long term downtrend. And the color of the first candle is similar to the previous one. That is, there has been an extended downtrend, so the color of the first candle has to be red, and the body of the second candle has to be green, which is opposite in color to the first candle. Confirmations about the trend. A small real body is being covered or engulfed by the larger one. Large volume on the day of the engulfing will increase the chances of a reversal and the prices making new highs. If the engulfing body is absorbing the body as well as the shadow of the previous day, then this is a higher chance of a reversal occurring in the following days. And the reversal chances will increase if the open gaps between the previous and the current day increases. So we must always wait for a confirmation to avoid any traps. So let us look at some of the examples that we have spotted for you. So this is the charts of daily charts of Axis Bank on the National Stock Exchange of India. So there has been a downtrend, prices go up again, and there has been a minor downtrend. So if I am going to zoom this for you, there has been a minor downtrend, and we see at the end of a downtrend at the trough, we see a red candle, a very small red candle, and on the next day, it is totally engulfed by the green candle. And we have seen that there is a new highs have been made. So this is what a bullish engulfing pattern is. We must always look and compare what is the volume on the bullish engulfing day. So if we see, this is the volume on the bullish engulfing day has been very high as compared to the previous days. So as we've already covered, a large volume on the engulfing day does increase the probability of a reversal. So this would have been a very good trade, but we must always wait for the next day confirmation. So as we have seen, the next day is opening higher and it is a bullish day. So it is a good trade to enter. One can enter here and he can see a good amount of profit. So let us see another example. Britannia Industries. This is another stock on the National Stock Exchange of India. Prices have been falling tremendously. There has been a huge fall in the price from 3200 levels to about 2650 levels. We saw a red small candlestick at the end of a downtrend, and on the next day, it is totally engulfed by the green candle. The next day, we must always wait for the confirmation, and it has opened higher, which shows that the prices are going to rise. So, it is a very good time to enter the trade around the next day, which is a confirmation day, and we can see a very good uh, rise in the prices. I'm going to show you another example on the charts. So this is an example of Tata Consultancy Services on the National Stock Exchange of India. Prices have been falling tremendously. At the end of a downtrend, we see a small red candle and it is totally engulfed the next day by a green candle. And the prices start to make new highs. So that is what a engulfing pattern is. If you can spot it, it is a 2 day candlestick pattern. If you can spot it, and use it along with other indicators and oscillators, you can take an informed trade and you can yield better results. So that is all for now. The next lecture will be about the bearish engulfing pattern. So we'll see you next time. Thank you.